Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. Let's get started understanding the GIFT Nifty. GIFT Nifty today is trading higher, which is indicating a start in the green for the Indian markets. Again, talking about the Asian markets have also opened higher this morning, where Nikkei is witnessing an up move of around 0.6%. Hang Seng markets are also witnessing an up move of around 0.8%. The US futures traded flat after cash market ended in the green on Monday. US markets ended higher for the third straight session, where Dow Jones, S&P 500 did rise around 0.5% each. Oracle did fall 7% in extended trading after company's Q2 revenue misses expectations. So clearly a news-based impact which has been seen in stock-specific action in the US markets. However, talking about the yield, US 10-year yield unchanged at 4.24% ahead of US inflation data and FOMC decision clearly indicates the economic indicator action impacting the yield as well. The energy pack, crude did rise above $75 a barrel amid concerns around oversupply despite OPEC Plus cuts. As we see that the Asian markets are showing signs of positivity, the GIFT Nifty is also higher this morning, and the US markets also ended on a positive note in the yesterday's session overnight, while the US markets did close. So all of these sentiments are clearly indicating a positive start for the domestic market as global markets are clearly supported. Let us now quickly take a look at the trade setup for the trading session today. It's a Tuesday session, the 12th of December, and taking the cues from what happened in the last session, the market made a new record high and closed higher, but failed to sustain above the 21,000 mark on the Nifty 50 due to profit taking, of course, and range-bound trade in the yesterday's session. The consolidation, there are chances, is set to continue as long as Nifty stays below 21,000 with immediate support at 20,850, but sees the 21,500 mark on the higher side if the index closes firmly above 21,000. In the yesterday's session, the benchmark indices started off the week on a positive note, though it was a range-bound session. The BSE Sensex climbed around 100 points to close at 69,929, while the Nifty 50 gained 28 points to close at 20,997 and formed a small-bodied bullish candlestick pattern. Of course, there was action seen in all the indices, and there was stock-specific action on the whole as well. The narrow range-bound movement in the market for the last three sessions is indicating a concern after a sharp up move of the early part of December. However, overall positive chart pattern of Nifty remains intact, and there is a possibility of Nifty continuing its upward journey without showing any further major breakdown in the near term. A decisive move above 21,000 mark would open the next upside target of 21,550, while immediate support is placed at 20,850 levels. The broader markets, of course, in the yesterday's session did outperform frontline indices on positive breadth. The mid-cap index and the small-cap index were witnessing gains and did close with around 0.5% or more gains in the closing session. Of course, 0.7% for mid-cap as well as 0.8% respectively is what we did see, and there was a lot of stock-specific action as well. Considering all of these, now we move to the support and resistance levels for Nifty and Bank Nifty. For Nifty, Nifty is likely to see immediate resistance at 21,021, followed by 21,046 and 21,085, while on the lower side it can take support at 20,943, followed by 20,919 and 20,880. Talking about Bank Nifty, yesterday the Bank Nifty hit a fresh record high of 47,588 in the morning, but saw some profit taking at higher levels and remained range bound for the rest of the session. The index ended at a new closing high of 47,314, up 52 points, and formed a shooting star, a kind of candlestick pattern on a daily chart at the high. It is a trend reversal pattern, but needs confirmation in the following day trade. Going ahead, we can expect some sort of consolidation. The range of consolidation is likely to be 46,800 to 47,500. Overall, there are chances, and if we talk about Bank Nifty, the trend here as well is positive and dips should be used as a buying opportunity. The index is expected to see resistance at 47,516, followed by 47,611 and 47,764, while on the lower side it may take support at 47,210, followed by 47,115 and 46,962. So these are the important support and resistance levels for both Nifty and Bank Nifty, which one needs to consider. Now let's take a look at the important stock-specific action and the stocks and news for today, which might create an impact in the trading session. We start with Infosys, as the country's second-largest IT services company said that the board has appointed Jayesh Sangrajka as the Chief Financial Officer and key managerial personnel of the company with effect from 1st April 2024. Nilanjan Roy has resigned as Chief Financial Officer and key managerial person of the company. Roy's last date with the company would be March 31st, 2024. So, a news-based impact which will keep Infosys in focus. The next stock in action will be Wipro, as the IT service company said it has supported Merrily Electronic Systems, the mobility technology supplier to the automotive sector, in the development of its cabin digital twin viable product. This product enables original equipment manufacturing, that is OEMs, to introduce connected vehicle services to the market quickly. The next stock in focus would be REC, as the state-owned entity has entered into a 200 million euro loan agreement with Germany's KfW Development Bank. REC would use a line of credit to refinance investments in the distribution infrastructure of discoms in the framework of and in alignment with the revamped distribution sector scheme. The next stock in focus would be DLF, as Vivek Anand has resigned as Group Chief Financial Officer of the country's largest real estate developer to pursue other career avenues. Vivek Anand will continue in his role until February 29, 2024. Ashok Kumar Tyagi, who has the overall responsibility for all corporate functions including finance, will now have oversight of the group finance, IT and secretarial functions. Currently, Tyagi is the Managing Director of DLF. And last but not the least, we keep an eye on Rail Vikas Nigam Limited, as the joint venture of RVNL URC emerged as the lowest bidder for part design and construction of an elevated viaduct, 5 elevated metro rail stations, and a ramp up between chainages for the Indore metro rail project. The project is worth 543 crore rupees, and RVNL holds a 51% share in the joint venture, and the balance 49% is with the URC. So these are all the stock specific action. We have IT stocks in focus. We have stocks like REC, real estate giants like DLF, and railway stocks again like Rail Vikas Nigam Limited also in focus. Let us now take a look at the FIs and DIs action. The foreign institutional investors net bought shares worth Rs 1,261 crore, while domestic institutional investors sold shares worth Rs 1,033 crore on the 11th of December. And with this, we come to the wrap of the podcast session for today. To sum it up, as we see, there's a lot of action seen in the market in the last week, and this week for Indian markets has started really well. We can only anticipate and expect that this positive momentum sustains during the entire week. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.